Hey guys, what's up? Welcome back again with another interesting and learning video. So in this video, I'm going to explain about the basics of candlestick. Okay, how to read candlesticks and what are the part of candlesticks. Let us see. Suppose that this is the day candlestick. Okay, candlestick consists of two parts, that is body and wick. So this part of the candlestick is called as body, and this part of the candlesticks are called as wick. Similarly, this is also a wick. So let us consider this candle is a day candle. Okay, now you can see here on the screen, this part of the candle is called as opening or closing price. Suppose that this is green candle, then it will be its opening price. If this is a green candle and this is a closing price, and this part of the candle is the highest price of the day, where the market has touched the highest price but not closed at this point. Okay, and this part of the candle is called as lowest price of the day. Let us take an example. Suppose that this is a green candle and the price here is 10 and this part of the candle is 15 and highest price of the day is 20 and lowest price of the day is 5. Suppose that market has opened at 10 rupees and it has moved to 5 but not closed the day. Still it is moving and it has reached to 20. This is the day high, but still the market hasn't closed and it has come back to 15. Now the market has closed on this day. So in this way we can read the candle, that is opening price is 10 and day low is 5 and day high is 20 and closing price is 50. And similarly in red candle, just the opening and closing prices changes. Okay, suppose that this is a red candle, the market open at morning, the price is 15. Okay, in between when the market closes, it has moved to 20 and also 5, but at the end of the day it has closed at 10. Then we say this is our closing price and this is our day low and this is our day high. Now let us see the candles in the live chart. Now we can see on the screen, this is the chart of Bitcoin. So here you can observe the candlesticks. This is the red candle, this is the green candle. As I told you, the lowest part of the body is the closing price and the highest part of the body is opening price, and the lowest wick is the low price of the day and highest wick is the high of the day. So we can change these candlesticks according to our time frames. That we have many types of time frames, that is 5 minutes candle, 15 minutes candle, 1 hour candle, 1 day candle, 1 month candle, week candle. You can select according to your convenience and you can check in all type of candles. So these candles are nothing but the movement of price from day low to day high or low to high in 5 minutes or in 15 minutes or 1 hour. This indicates the price movement. Now let us understand what are the different types of candle and how it works. Okay, so there are so many types of candle, that is doji, hammer, inverted hammer, bullish engulf. So in this way there are so many types of candles, and I will be sharing the PDF in the description, or you can check in the Google. There are so many types of candles. So now I will be telling very important candlesticks which going to work in real market. Okay, let us see this. So this candle is called as doji candle. You can see here the body is very very small and wicks are big. So you can see here, as I told you, the upper part of the body is the opening price in red candle and the lower part of the body is called as closing price, right? Here the opening price and closing price are always here. Opening price and closing price is almost equal and the wicks are very very big. So this is the price movement, but it has closed where it has opened, which means that the buyers and sellers are almost equal. Okay, this kind of candles are very important because whenever there is a uptrend, suppose that this is uptrend, right, and market is moving towards upwards, and when this doji candle forms, which means that the buyers and sellers are equal now. So until this the buyers are very dominating, but buyers and sellers becomes equal. So there is more chance that the market is trying to get reversal. So we can see the reversal here from uptrend to downtrend. Similarly, if there is a downtrend and if we see a doji candle, then most probably we can see a reversal in the trend and we can see from downtrend to uptrend, market may moves from down to up. And you can see here in some candles the body is big and in some candles wicks are big. It means that the price of the opening and closing is very near in this kind of candles. Here the price of opening and close is very far, which means that the market is in good trend. Now you can see here, this candle is called as inverted hammer. You can see here, this is a inverted hammer where the opening price is this and closing price is this, and the high of this price has reached to this level. So whenever there is an inverted hammer, when it appears on the top of the trend, which indicates that the buyers are getting weak and sellers are getting dominating, then that's when the market turns the uptrend into downtrend. You can see here, until this the market was in uptrend, and when this inverted hammer created, then the market start to fall. Okay, so this is one of the important candle, that is inverted hammer. You have seen the inverted hammer. Now let us see the hammer candle. You can see here, this is the hammer candle where the price of opening and closing is near. This is the opening price and this is the closing price, where the market is trying to move up. It means that the buyers are getting dominated. So this is the wick. Whenever this candle appears in the low of the market, that is whenever there is a downtrend, and if we see this hammer candle, then we can start to buy on call side, that is upside, because whenever there is a downtrend and this candle happens, which means that the sellers are weak now and the buyers are getting dominated, then we can see a uptrend or the market towards up. You can see here, until this the market was moving down, and after this hammer candle we have seen a big movement upside. Now you can see here, this candle is called as bearish engulf. We can see here the candle, the red candle, this is called as bearish engulf, where it has covered this green candle. Okay, whenever there is a green or red candle, suppose that this is green candle, if the red candle covers completely this, which means this is the bearish engulfing, which means that it is engulfing, means covering the all the buyers. So here the buyers has been covered by sellers, which means that before this the market was in uptrend, and when this bearish engulf candle formed, we have seen the downtrend in the market, which means that it has stopped the buyers and it has covered or it has dominated the buyers. Similarly, if we see a red candle is covered by a green candle, which is called as bullish engulf, which means that, and it should appear in the downside of the market. Suppose that the market is in downtrend, and if we see a bullish engulf, which means that a green candle covering the red candle, then we can see a uptrend in the market, because this green candle has covered all the sellers and the buyers got dominated. So this is one more example of bullish engulf. You can see here. Here the red candle has completely covered the green candle, which means that the sellers are dominated. Now the uptrend has turned into downtrend. Okay, in this way there are so many candles. I have told only the important candles which works in the market, and if you want to have more idea about the candles, you can search in the Google and you will be getting so many type of candles. And also you can download the PDF for various candles. So I hope you learned something today, and if you enjoyed this video, make sure to subscribe and like this video. Thanks for watching.